Eskom is back in the black after almost a decade. It's recorded an annual profit before tax of 23.9 billion rand, marking a sharp reversal from last year's near 26 billion rand loss. Now, the turnaround was driven by an improved performance across its generation fleet. Load shedding fell sharply to 175 hours, which means lights stayed on for almost 96% of the year. Operational efficiencies also helped slash diesel costs, saving Eskom more than 16 billion rand. But risks remain. Municipal areas surged 27% to nearly 95 billion rand, and Eskom is still grappling with tariff uncertainty. It's called for a sustainable path that balances affordability with financial stability. South Africa's non-farm payrolls slipped in the second quarter. Formal employment reduced by 2.1% year-on-year, and that translates into 229,000 job losses during the period. Now, this was led by a drop in part-time work. From a compensation perspective, year-on-year gross earnings rose 3.4%, while basic wages ticked up 3.6%. In the meantime, more than 3,000 jobs have been saved following Tiger Brand's sale of its Langeberg and Ashton Foods business. The completion of the deal brings to an end a 5-year struggle to secure the future of South Africa's largest deciduous fruit processor. The factory will now be run by a consortium led by the Ashton Fruit Producers Agricultural Cooperative, and they will be supported by no fund. In addition, Tiger Brands has committed 150 million rand to establish a community trust that will focus on food security and youth development, amongst other things. A further 31 million rand will be invested in upgrading the site's effluent treatment plant in order to support long-term environmental sustainability. Tiger Brands says this responsible exit underscores its strategy to streamline its portfolio while ensuring that Langeberg and Ashton Foods continues to thrive under new ownership. Volkswagen has also committed itself to saving jobs. The car manufacturer says the group has taken a deliberate decision not to automate certain areas of its functions, and in doing this, it's preserving employment opportunities in South Africa. The company has had a presence in SA since 1964 and employs about 4,000 people in the country. Lesaka Technologies has reported a strong performance during its 2025 financial year. The fintech group has posted a 14% rise in revenue and a 33% jump in adjusted earnings before interest, tax, depreciation and amortization, achieving the guidance it provided. But tempering the good news, the firm has reported a net loss of $87.5 million. That's largely due to the inclusion of a tax-adjusted non-operating, non-cash charge relating to a change in fair value and sale of MobiKwik. Looking ahead, Lesaka expects 2026 to be another good year. The firm is guiding for adjusted EBITDA growth of at least 35%, and it expects adjusted earnings per share to more than double. Ashura has had a good first half. A trading update from the Healthcare Real Estate Investment Trust reveals that strong rental growth supported a £12 million uplift in property valuations, with lease renewals and new developments adding further earnings momentum during the period. The brief comes as the firm prepares to delist from both the London and Johannesburg stock exchanges following a takeover offer from Primary Health Properties. The delisting is expected to take effect later in October. Netcare says it's had a better second half. That's as the private hospital operator benefited from sustained operational efficiencies and lower interest rates, amongst other factors. And as a result, it's forecast a jump in adjusted headline earnings per share of as much as 19%. Further details on the group's financial performance and its outlook for the next financial year will be provided when the company opens its books on the 24th of November. South Africa has recorded foreign direct investment flows of 73.5 billion rand in the second quarter. This is a sharp reversal from inflows of 11.7 billion rand in the first quarter and marks the largest outflow since available records began in 1985. The outflows were primarily due to Anglo American spinning off its platinum unit, which is now operating as Valterra Platinum.